Hi, good evening, friends. Welcome to Konexio Technical Insight. I am Rahul Randeria, and I would be conducting today's show. Today, we would be discussing regarding the trends, the setups, the technical indicators, and candlestick patterns on Nifty and Bank Nifty. Now, first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that Nifty has been moving into an upward rising channel, and the primary trend seems to be positive. So, any dips should be used as a buying opportunity. Though last week was a truncated week, there were only three trading sessions: Monday, Tuesday, and Wednesday. Market did saw a correction, but for whole 3 days. So definitely, market didn't bounce back from the lower levels, but yes, definitely the primary trend still remains intact, and we uh, as we have been discussing regarding this particular primary trend being positive, we still remain on that particular ground that again our view is remaining still bullish on the markets. So now let us see what we have observed on the Nifty daily charts, and we will try to figure out what are the prospects of market trend for the next week. Now let us see the Nifty daily charts uh, on the screen. Yes, we have been seeing this Nifty making this some kind of inverse head and shoulder pattern. It was a breakout. We have seen this particular horizontal blue line where earlier it was a multiple resistance zone, and now exactly it has become a support. Now you can see a small falling parallel channel line. Nifty has taken a support near that particular horizontal blue line, and we feel that this multiple support might bring in buying at the lower levels. So as we have discussed earlier also, and we still remain bullish on the markets. So the view remains same. Any dips should be used as a buying opportunity in Nifty, and Nifty might cross 17,700 mark in the coming days. So definitely any dips should be used as a buying opportunity. And one thing more, again the global markets were also positive, so definitely the overall trend still remains intact, that is view is bullish. Any dips should be used as a buying opportunity. Now let us discuss the important supports and resistance in the Nifty for the next week. So the important support in the Nifty for the next week is placed at 17,387, which is the first support. Second support is placed at 17,235, and third support in the Nifty is placed at 17,076. Whereas on the upside, the first resistance is placed at 17,666. Then second resistance in the Nifty is placed at 17,779, and third resistance is placed at 17,901. So these are the important supports and resistance in Nifty for the next week. Traders are suggested to follow this supports and resistance level and trade in the direction of the primary trend. Now let us discuss what we have seen on Bank Nifty daily charts. You will see on the screen on Bank Nifty daily charts, we have been discussing regarding this upward rising channel since last couple of weeks. Bank Nifty has managed to take a support near the support trend line of this particular rising channel. For the whole week, Bank Nifty remained range bound. Uh, Bank Nifty didn't see any either side breakout. That means either above 38,000 or below 37,200. This was the 800 point range where Bank Nifty remained stuck for the last week. Now, as we have seen that the upward rising channel remains still intact, but the clear-cut breakout in the Bank Nifty would remain about 38,000. So once Bank Nifty breaks 38,000, then it would be poised for an upside rally towards the level of 40,000 mark in the next 3 to 4 weeks. So definitely looking at this price pattern, RSI is still with positive signals. Any dips should be used as a buying opportunity in Bank Nifty also. So now let us discuss the important supports and resistance in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 37,264. Then second support is placed at 36,827. and third support in the Bank Nifty is placed at 36,242. Whereas on the upside, the first resistance is placed at 37,988. Second resistance is placed at 38,231, and third resistance is placed at 38,768. So these are the important supports and resistance in Bank Nifty. The view in the Nifty in the Bank Nifty is buy on dips. Any dips should be used as a buying opportunity. So let us friend comes to the second section of our show, which is option analysis. In option analysis, we'll try to figure out what we have observed in Nifty and Bank Nifty calls and puts, and we'll try to figure out what could be the trend and what the smart money is doing in option segment. So now let us see what we have observed in Nifty calls. In Nifty calls, the action was seen in 17,600 calls, then 17,700 calls, 17,800 calls, and 17,900 calls. Now here you can see the rise in the open interest, but there has been a fall in the premium of these out of the money calls. Implied volatility is also slightly low. So low implied volatility means we might see support coming in at the lower levels in Nifty. So most probably on the downside, 17,000 support might come at the lower levels, and Nifty might get rally or start rallying on the on the upside. So maybe for the next week, 17,900 could act as a major resistance from the current levels. So slowly and gradually, Nifty might pick up the momentum on the positive side. So maybe just because of the implied volatility being so much low, Nifty might find support at the lower levels. So yes, we have seen a drop in the option premiums, but that might be changed in maybe on Monday or Tuesday, because the global markets were also positive. So definitely, the trend seems to be positive from this data also. Now let us see what we have observed in Nifty puts. In Nifty puts, you will see the action was seen in 17,400 puts, then 17,300 puts, then 17,200 puts, and 17,100 puts. Now here you can see there has been the rise in the open interest. Implied volatility is little above the comfort zone. So maybe 15, it is between 15.09 to 16.25. There has been a slightly positive change in the Nifty option premium. I mean to say Nifty put option premium. So looking at the last week's trend, continuously from Monday, Tuesday, and Wednesday, Nifty was under pressure. So the smart money might have bought again puts, out of the money puts, and might have done out of the money call writing, which we have seen in Nifty calls in this earlier charts of Nifty calls also. The drop in the premium in Nifty calls, but there has been a rise in the Nifty puts premium. So definitely the smart money was little bearish last week, but looking at the implied volatility in Nifty calls and Nifty puts, it is still into comfort zone. We feel that downside is not major. Downside cannot be seen from these levels. Maybe on the lower side, 17,300 to 17,200 could be the range where we might see strong support coming in the Nifty. So definitely, the view remains that buy on dips should be the strategy in Nifty. Now let us see what we have observed in Bank Nifty calls. In Bank Nifty calls, again you can see there has been the rise in the open interest in 38,000 calls, then 38,500 calls, then 39,000 calls. Now here you can see rise in the open interest. Implied volatility is also rising, but there has been a significant drop in the option premiums, Nifty call option premiums, Bank Nifty calls option premiums, which clearly indicates that because last week, I mean to say throughout the week, the markets have been remained under pressure, and the smart money might have done writing in the out of the money Bank Nifty calls. So that is the reason why we have seen a drop, significant drop in Bank Nifty option calls of 38,500 strike prices. Implied volatility is slightly higher, between 17.76 to 16.93 to 17.76. So maybe initially on Monday we might see some sort of cool off, but on the lower levels we feel that buying might emerge at the lower levels. Now let us see what we have observed in Bank Nifty puts. You will see on the screen that in Bank Nifty puts, the action was seen in 36,000 puts, then 36,500 puts, uh, sorry, 37,000 puts, then 36,500 puts, and 36,000 puts. Now here you can see there has been slightly rise in the Bank Nifty option premium. Smart money might have bought uh, Bank Nifty puts because, as I said, that last throughout the week the markets were under pressure. The implied volatility is little higher. It is between 19.79 to 21.95. So as I said, uh, initially we might see some sort of cool off in Bank Nifty also, but on the downside we feel that uh, maybe 36,000 could uh, act as a strong support for whole throughout the week. So definitely any dips should be used as a buying opportunity in Bank Nifty also. So looking at the charts of Nifty and Bank Nifty and option data, we feel that the strategy should remain bullish. Any dips should be used as a buying opportunity on the lower side. Now, friends, let us come to the final segment of our show, which is positional call. I have identified one stock from the oil and gas sector. The name of the stock is IGL. You will see on the screen. The stock has formed an inverse head and shoulder pattern. On the right hand side, you can see the prices has been consolidating. The volumes are consistent. RSI is also in the midway. You can clearly see when prices were making lower tops, where prices were making lower tops, and the RSI was making higher tops, which is clearly indicating a positive divergence in the stock from the on the RSI front. So the price volume action is showing strength. The indicators are showing strength. The stock is currently quoting around 390. So for long-term investor, one can accumulate the stock in the range of 389 to 380 for an upside target of 470 in the long run. So long-term investors can accumulate the stock in the range of 389 to 380 for an upside target of 470. The stock remains bullish. The pattern is also bullish. So investors might or should have this stock in the investment portfolio, at least for long term. So thank you very much, friends, for watching the show, and have a nice trading week. Thank you.